LeAnn Riley here with the Real Estate Investing Made Simple Club. And this is where I interview live investors or leaders in the real estate investing community nationally. I'm LeAnn Riley, a real estate broker and coach, and I lead the Encore investment team of realtors in the Twin Cities, Minnesota. I built a multi-million-dollar portfolio of residential, multifamily, condo development, commercial, and vacation properties. And as a national coach and trainer, I help ambitious people build wealth through real estate investing with my proven profit formula coaching program. And I provide free education for investors through this club and my YouTube channel. So check out LeAnn Riley Real Estate and be sure and subscribe. And today's topic is how to improve investment returns when shit happens. And my guest is Steve Taylor. He's a landlord and realtor specializing in the Uptown area of Minneapolis and someone well-versed with the current environment. You know, landlord challenges can happen in any market and at any time. And COVID has certainly shown us that. And in the past years, there's been a lot of shifts in the Twin Cities area. And Steve is on top of all of these because he owns many properties in Minneapolis and Uptown, and he does short-term rentals in Minnesota and in other states. And first, I always like to share how I know our speaker, because real estate investing is about networking. And Steve is active in a lot of Facebook groups, and that's how I found him. And he's so helpful, and he advises other investors on what works. So I wanted to talk to him and find out and help you landlords figure out something new for your business.
And, you can't do that on the stock market, right? Stock market, you don't have that kind of insight where, you can beat the big guys, but you can do that locally, so yeah, it's been great.
So you just moved to the Minneapolis area in 2010.
No, I moved here originally in like 2004, but I moved away for a while. And so I was living in Uptown around then, and then moved away, and then moved back in 2010. And I bounced around a bit since then. I've lived in Florida and California, and but for the most part, I've lived in Minneapolis, and especially since 2010.
Yeah. Cool. I think I started buying in Uptown in the 90s, and I had 100 units. I built a portfolio actually right on Grand Avenue was the very first triplex we bought on the edge of Uptown. And it had a fire, and we gutted and fixed it. And that was the very first one. And then, refinanced it and held it for, 10 years. And then built it up to 100 units in South Minneapolis, basically was our turf. And eventually we 1031 exchange that into Uptown apartment buildings. Okay, like 10 and 12 unit ones. So it's always been a good area. And that was like in maybe the late 90s, by then 2000, when I was buying the apartment buildings. And then I got to finish the story. We actually converted those apartment buildings into condos, because in about 2002 or 2003, it was just really popular you could really make some money converting the apartment buildings. So we converted three pretty good ones there. Yeah. And that's what got me the money to buy a beach house in South Carolina.
Oh, we're in South Carolina.
Well, it was in Edisto, which is about an hour south of Charleston.
Okay. Yeah, I lived out near Charleston for a little bit. So it's a nice area. Yeah, it
is nice.
Yeah, and that's a nice thing. The flexibility with real estate, you can kind of really make it your own. Like whatever your kind of lifestyle you want to pursue is, and wherever you can use the 1031s to kind of move your money around and pick your investments in different places. And
You can, and we're going to talk about that with some short-term rentals. Right before we get going a little bit more, I'm going to take a poll. What we like to do is find out from the listeners who's here, because that helps Steve and I be able to answer and talk to you. And this will take less than a minute, folks. Just vote on the poll here. Who are, where are you in your real estate investing? What's your interest? And I'm going to just give it about 10 seconds. And we'll see who we got here, who the winner is. Okay, one more chance to vote, and here we go. It looks like, oh, look at, we got people here. The winner is buy and hold, but we got a little bit of some starters, some scalers, but buy and hold is the biggest category, which, you know what? I love buy and hold. Here, I can share the results right here. I love buy and hold because that's the name of the game. That's why I like what you said, Steve. You paid 180 and now you sold it for 500 something. And you know what's cool about that? You made money along the way, besides at the end. Yeah. So, okay. So once you got that first one, then you just grew and bought more in the Minneapolis area?
Well, that wasn't my first one.
Oh.
Before that.
Here.
Yeah. No. In Minneapolis, I had bought 2 properties before that. That was my first in Uptown. I had bought a triplex near downtown Minneapolis for $52,000. Yeah, that one was really bad condition, but we actually it wasn't that bad. I mean, it took about $10,000 to get it to working condition, and we rented out for about 6 years, and we sold it for 200, and I think it was 210. This was back in 2016. We bought a house in Uptown for 225. With 1031 into a house in Uptown for 225. Then we sold that for 325 and 1031 into a duplex I still own in Uptown. But the triplex was my first one in Uptown for 180. I bought actually both of them I bought them both foreclosed from Wells Fargo within 3 months of each other.
Okay. So you got really good deals.
Yeah. And actually right after the triplex, there was so the triplex was on 27th Emerson. There was a fourplex on 27th and DuPont for $220,000. And I turned that down because I thought it was too expensive at the time.
Oh.
Just bought the triplex for 180, and I thought it was worth like 200, not 220. And so there were a lot of good deals back then. I mean, it was definitely a great time to be a real estate investor.
That's right. So right now, what kind of properties are you holding in your portfolio?
So I have everything from like a single family home all the way up to an eightplex, and then I have a compound in like Florida, so like 3 adjacent parcels with 3 duplexes and a cottage, so a total of 7 units.
Oh, and they're all like right together.
Mm-hmm.
A compound. I like that. I haven't heard of it. A compound.
Yeah, I was looking for something somewhere warmer. There's another one in San Diego I was looking at, which was a real compound, and it had like 3 separate kind of buildings, and it was gated. And but yeah, I know it's and that's kind of what I've been going for recently, is just larger number of units, because it's really hard to kind of make numbers work now. So if you buy larger units, and so last year I bought an 8 unit for $775, and that just got reappraised for $1.3 million. We're looking at adding. Yeah. Well, we put $250,000 into it. So
yeah, you did a lot of work. Yeah.
Yeah, and it was those kind of things are interesting in Minneapolis. If you can like find illegal units and legalize them, or add units, especially if units are worth 150 to $400,000 each, and if you can build one for 50 to 100,000, I mean, you can make a lot of money that way.
That's what's great about Uptown. it's really got a strong, attractive rental clientele. It's a bustling neighborhood.
Mhm.
So it's
Yeah.
a good area to do that, add value.
Mhm. Yeah, and I expect, in the future there to be more density. So, you know, if if you just buy something on weight, eventually you'll probably be able to build more on it. So,
Yeah. Okay. So I'm curious, Uptown is your turf, and you live in that area. What have been the effects or the impact of all the civil unrest? And, we're all experiencing it. How's things going in the Uptown area?
yeah, I mean, I haven't really had any vacancies this year. Last year we had a few, and it was kind of hard to tell if it was to do with COVID or the unrest. But everything's come back, really strong this year, and it's kind of surprising some of the more upmarket and expensive developments, that I thought would have a lot of trouble filling, have been filled like 95% already. So, even through all this, when everything's been closed, people been renting apartments, and I've kept pretty close to 100% vacancy across both long-term and short-term rentals.
And now take that 8 unit where you just fixed up everything. Are and now you're competing maybe with some of the new builds, all those high-rise newer stuff. Are you getting, top of the rent?
Yeah, we do like furnished rentals there. So we do like mostly like people relocating or things like that. So we don't really directly compete against them. Our
Sure,
unit,
furnished is a big difference. Yeah, furnished rentals. Yeah.
and the unique thing about this building, and one of the reasons why I got cheap was that two of the units were um, sleeping rooms, and the fact that they shared a bathroom. And that's currently illegal in Minneapolis, but this building had two units like that grandfathered in. So the person that was selling it to me thought that I was going to convert the building into for a fiveplex. He didn't even think that it was legal how it was, and it was legal. And furthermore, it had the zoning to, I already had those units, and the city doesn't like those units necessarily. So the city was kind of happy to let me convert those into full units. So what I did is I took so there's both units shared a bathroom from the hallway, and I cut that bathroom into two, and then created and cut into the wall. I closed the entry from the common hallway, and created an entrance from either unit through the existing walls. And that was very expensive as far as permits go, because whenever you add a unit, the city charges you $5,000 or $6,000 just as a base permit fee without plumbing or electrical. That's just the cost of doing business. But once again, if you're able to add a legal unit, so we went from 6 units and 2 sleeping rooms to 8 units, legal units, and
That's
some of
huge.
those, yeah, that's huge. And so a couple of those units are like 250 square feet, which is actually
Oh,
illegal in
that is
Virginia.
small.
Yeah,
That's the size of an RV.
yeah. Well, so the minimum legal unit size in Minneapolis is I think 350 square feet. So these are smaller than the legal minimum size of a unit. And so they got grandfathered in through that.
Oh, because they were sleeping rooms. That's how you grandfathered them in.
So when I say sleeping rooms, they were legal units. They just didn't
Yeah.
have. So they were legal units, but just not full legal units. So the reason I had to pay the extra fee is because whenever there's a change of use, the state does a review, and you have to pay SAC fees if you have
Yep.
any. And since
Development fees.
yep, parks and parks fees as well. And so the reason why was we're adding a bathroom, and so they didn't charge us for 2 units, they just charged us for 1 because they gave us credit for 1 bathroom. That was kind of interesting, and that was really how most people get average returns. But if you really want to kind of supercharge your returns, you got to look for weird deals and stuff other people don't want to try it. And this guy that sold it to me was a really wacky guy. is 70 some years old. The whole building was empty except for one of the units. All the units were functional. He just kept them empty because he didn't want to live around anyone else.
Oh,
And this guy,
wow.
yeah, I thought I didn't think he was a wealthy guy, but one of his realtors told me, he had $4 million in stock market. He was sleeping on a mattress, and he had like this old, crappy, desk, and he was living like a pauper, and but he was a real evil guy. Like, he tried to report me to the city, and he just made it hell because he he didn't think that it was able to be legalized into an 8 unit. So he was kind of sour about it. And what really made it hard was he negotiated staying in the building for another 90 days beyond when he sold it.
Ah,
So he was there to kind of harass me and my staff while we're there. And so it was kind of a pain, but, like, where we came ahead, $300,000 in equity, and like for, 6 months work, so
it's so interesting because you're right. The stuff happens like that, 90 days in the building, and then you end up, it wasn't how you thought it might look, but you dealt with it. And same with going to the city and adding units or modifying things. It's not quite how you think it's going to be, but you have to just work through the hurdles.
Yeah, Minneapolis is a pain to work with to do anything. Even the smallest thing is a pain. But like, and there's some people that have been dissuaded by that and go invest in suburbs or whatever. And I get the logic behind that. But for me, if I'm going to invest in Minnesota, I'm going to invest in like Minneapolis, maybe St. Paul. I haven't ever invested in St. Paul, but I might consider that at some point. But Minneapolis is because you get, and this is true even over St. Paul, you get the premium on the rents. You can't get, especially historically, maybe this is changing a little bit now, but you've never been able to match Minneapolis rents anywhere else. You went to Richfield, Bloomington, now maybe you can if you go down to a diner or, certain neighborhoods, but, you're definitely going to be paying Minneapolis prices, maybe even higher. And, finding something available in a diner or is a lot less apartments. And especially if you're a beginner, you're just starting to invest and you want to buy a duplex or whatever, they're a lot harder to find the further out you go.
Oh, so, totally. There's a lot more available just in St. Paul and Minneapolis. Absolutely.
Yeah.
So
and then once you step down to the suburbs, so like, most are 80-90% are Minneapolis, St. Paul. Then, like the suburbs one ring out, there's some, but the further out you go, the harder it is.
Yeah, they didn't build them.
Right. Yeah, because like housing costs were so low out there. Why would you need a duplex, right? Yeah. So that's one of the advantages of Minneapolis if you're just starting out. But there's also duplexes that are a lot more expensive than they used to be. I remember when duplexes were averaging like 300,000 in Uptown. And I was like, that's crazy. I'm never going to buy another duplex again with them being that expensive. And now they're like twice that expensive.
I know it. That 221 you passed on would have been
that was a fourplex.
Oh my gosh. Yeah. I'm trying to think, what did we pay for those, even for those apartment buildings, the 8 and 12 units, I paid less than your 700, back then. But I was paying 18% interest back then too. So it's all relevant, folks.
And rents were lower too, right?
Yeah. Rents were lower.
And that's kind of the interesting thing about Minneapolis is the more they try and make rents affordable. So they're trying to like make it affordable for this very small segment of society, but they're taxing everyone else. So it actually makes rent more unaffordable across the whole city, just by them meddling in the market, and they don't really even understand what things they could or should be doing to reduce that. So it's one of the infuriating things about living in Minneapolis. Like we give developers like 35 million a year to build affordable housing, and that's one of the reasons why we have one of the highest tax levies in the last decade. So there's a lot of things which are really troubling and annoying about Minneapolis, but once again, it goes back to profitability, and it has become less profitable in Minneapolis over the years. A lot of the rent increases have just gone to kind of costs. So like higher insurance, higher taxes, stuff like
Yeah,
that.
and they get
But
ate up.
yeah, but and I am finding a lot of the people so I'm selling some of my smaller buildings and slowly kind of buying bigger buildings and 1031ing into them. And I do find a lot more of the people that are buying them are owner occupiers moving from places like New York and stuff like that. And I was just talking to a neighbor the other day, and they moved from New York about a year ago, and they bought a duplex because they couldn't afford a house. That's kind of crazy. Someone moving from New York City and they can't afford a house in Minneapolis.
Minnesota.
Yeah. So, well, Uptown specifically, at least. That's how far we've come. And, it's great. But, I think a lot of this is growing pains. But also, we have some governance issues. But, we've added so many units here. I mean, a lot of it just has to do with growing pains as well. And I think, next year is going to think a lot of things will be reopened, and that's going to drive people back to the area. But
Oh, totally.
even with everything closed, I mean, people are driven to this area because of a lot of the natural resources, like we have, the lakes and the bike paths.
Oh, yeah, the parks and the paths and the easy walkability, all of that. What about the eviction moratorium and how it got stretched on here in Minnesota? Did that affect anything, around the area or your holdings? No, but what I found is it seems like landlords who weren't savvy and didn't pay attention, didn't know where to get the money or to where to send their tenants. But it was really a simple process if you just followed it. And
I mean, in the beginning, that didn't exist, though. There wasn't
yeah,
there wasn't funds. And, I think it comes down to, there are a lot of people when times are good, it doesn't really matter who your tenants are, right? Within reason, if you have, the mongrel mob or, like some biker gang as your tenant, that might be a problem no matter what. But, when times are good, pretty much all tenants are paying their rent, right? When times are bad, that's when you start to see the difference. And, a lot of the people that I would talk to, I'd say, I would say, really understand the area that you're investing in, and what kind of people rent there, what their jobs are, because that kind of informs you on what's going to happen if things go bad, but also it will tell you, what kind of kitchen to put in. Because if you've got if you're in an area where, every worker is working on the oil rig, you probably don't want to put granite countertops in and, porcelain floors. You might want to put something a little bit more sturdy and cheap and replaceable, right? But if you're, serving executives that work at, Wall Street banks, you might want to invest a little bit more and get a higher return. It also tells you, if we go into a downturn, I sold. It was funny. I actually sold one of my fourplexes right before Corona, and we're in the process of it. And right when one of the tenants was starting to have problems, and that was kind of one of my only houses that was more kind of workforce oriented. And it was interesting because what that led me to kind of think is, okay, some landlords are going to have a lot of problems, and some landlords are going to have no problems. Because when you look at the kind of people that were most affected, especially initially before they rolled out all the unemployment funds and rent assistance, it was the people that were working service jobs and bars and restaurants,
right.
which were the hardest hit, and they had no reserves, right? So if you were a landlord to someone like that, or it put a lot of pressure on them. But people that were landlords to professionals, I felt less of a burden. Airbnb, there was a hiccup, and then it kind of has been going gangbusters for the last year. We haven't had any vacancies in our short-term rentals, pretty much.
Oh, yeah. That short-term rentals picked up during the pandemic because people didn't want to go to the hotel. They went to the short-term rental.
Mhm.
Yeah.
Um,
Now, did you convert some of these buildings you bought? Did you maybe you had long-term rental and then you converted some of them to short-term rental during the
well,
pandemic, or no, you already had that plan? Because you do a mix of the short term or the fix and flip or the buy and hold. That's kind of the three
well,
strategies.
so we sold like two fourplexes at around about the same time. I think one was towards the end of 2019, and one was in the beginning of 2020. And then one of those, and both of those contained, so of the 4 units, each one had two short-term rentals in it.
Oh, okay. Two regular units and two short terms.
Yeah, so we sold all two fourplex 8 units total, and one of the we did two 1031s. So the first one we used the money to buy the eightplex. So basically, I had to top it up. No. I bought a large house which had a legal apartment, and that was less than my first fourplex I sold. So I sold a fourplex for 900, and I bought a large house for 800, which had an illegal apartment, and I'm turning that into a triplex. That left 100,000 over in the 1031, and then I sold another fourplex. I combined those, and then bought the. So that was a total of 680 I had left over, and then so the Aplex was almost a perfect fit at 775, because you have to spend more, of course, in the 1031. And so we converted all those 8 units into short to medium term rentals. So they range from like 250 square feet to the largest is like maybe a 700 square foot 1 bedroom.
Well, that brings me, I want to ask, what about that new law about the short-term rentals that you can't have more than one per person or something? What about that?
Yeah, I mean, we'll have to figure that out, but I mean that just means we'll have to do 30-day rentals,
Oh,
um,
yes.
and so that's not really a big deal. And a lot of people, the premium on a 30-day is a little bit higher, but it's not. So we don't think we're going to have a lot more competition than we did before.
When does that go into effect?
It's in effect now.
But there's no policing.
Well, the Airbnb does ask you for the license number. They will not let you list your Airbnb if you don't have the license number. But the city had like this parts of the law that haven't been enforced yet. Like you're supposed to have like a safety plan and someone on call and neighbor notification, and so I think next year that'll probably be more enforced. The other kind of variable is that the council will be changed over shortly. So I'm part of a group of short-term rental operators that has been trying to advocate at the city to kind of stop this. And then now that it's just kind of is going to happen, we're advocating for grandfathering in of existing units. So if you have,
Oh, that'd be and I love that, Steve, what you say is because as a landlord, you need to be proactive and participate in these groups and speak up to the city council or whoever, because you're very correct that a lot of times it's people who aren't landlords or don't understand real estate who are making these decisions, and they don't always have all the facts.
yeah, I mean, one of the benefits of real estate over say this, just putting everything in a 401k and letting it sit in the stock market is you have a lot more control locally. So you can educate yourself on the market, but you can also exercise control. Like I can't tell the head of Exxon Mobil to do X, Y, and Z to his company. He's gonna say, "Who the hell are you?" But I can organize local community members to kind of get the city to change things or do things differently. I've had quite a lot of success with that, and so it's just that local involvement which really kind of is useful.
It is. Now, let's talk about the 2040 plan, which I think it went into effect like a couple years ago, if I'm recalling. But have you, when you added those 2 units, or have you done any accessory dwelling units, ADUs, they call them. Have you done any of that?
Yeah, so the house I bought is a 7,700 square foot house, and it had a legal apartment above the garage, which most people would call an ADU.
Right.
And so we went through and legalized that. So once again, we paid like the $5,000 permit fee and did all the plumbing. When you have an illegal unit, it's basically not having a unit at all. You have to permit everything from scratch.
Uh,
Um, and unfortunately, the city can sometimes be reasonable in that, and they'll just make sure everything in the unit is to code. And because it really kind of depends how far you want to go with that. So we had to redo a new kitchen, a new bathroom, and we're using that as an Airbnb right now, and been live for 2 or 3 months now, and it's been great. We're booked all the way through New Year's, and we're working on building our third unit in the house, but legalizing another unit in the basement of our house. So we just got a lot of wasted space right now. But it was kind of a good time to move. I had sold 2 4-plexes in Uptown. I moved one set of money to Lowry Hill and the other to Whittier. So I think I avoided some issues. And, you were speaking about 1031s, and that's kind of another benefit of real estate is that, you can move money around tax-free.
Totally a big benefit.
Yeah. So if you, like, for example, if you own ExxonMobil and, you thought that the price was going to go down, so you wanted to sell it and buy like BP, you would have to pay taxes on that. Whereas in real estate, if you want to sell a house and buy another house, as long as they're both rental properties, you can do it. You can defer the tax on it pretty much forever.
Pass it forward and forward and forward to the next piece of real estate
right.
as you grow.
Exactly. And so that, I started off as a buy and hold investor. It was kind of interesting seeing that survey. I was a buy and hold, and was always of the mindset of, you buy something, you sell it. And, so the problem with that is it's the velocity of money that kind of really is what kind of skyrockets your returns. You shouldn't be just focused on your return on investment on that property, because that's kind of stagnant, right? Once you bought it, stabilized it, remodeled it, there's very little you can do to outperform the market. So, at a certain point you say, hey, I've done all I can do with this building, and then you sell it to someone else and buy another building, do something else, or buy 2 buildings. And so that's kind of the only downside of buy and hold is, as investors we're told, it's kind of the best way of doing things. And I would say it's the best way of doing things for a period of time. And then if you really want to get better returns, to keep repeating that process over and over.
Move your money. I 100% agree with you. And the other thing about that buy and hold, your depreciation runs out, the good parts of it anyway, at a certain point. So don't keep holding, move that around so you can depreciate more on the next one and the next one. And you're right, the 1031 law of like kind exchange really makes a difference.
And beyond that, it makes you an agile investor, right? So if at a certain point you say, hey, I want to invest in Minneapolis anymore, I want to invest in South Carolina, for example, you're already had that mindset and that process to sell something. When a buy and hold investor comes to sell a property, they freeze up, and it can take them years to sell it. They decide they want to sell it, and then it's like they don't pull the trigger. But when you're, and that's another thing, you should never be that emotionally involved. I love some of my investments, but then I realize that I can love something even more, something bigger and something that provides more money. So I sold that first triplex I bought in Uptown for 180. I bought it for 180, so 530, and then I bought 7 units in St. Petersburg for 975, and the rents, without doing any work, rents are almost from 7,400 almost to 11,000, and our target is about 15,000 per month, and that should put the value at about 1.7 million. And we'll have to do some work to get it there, but The other thing is just staying ahead of the markets. Like Minneapolis is, we've had great growth from people moving here for the last 10 years, from the coast, from other parts of the country. And I think that's going to slow. I don't necessarily think the population is going to shrink, but I think that, over the next couple of years, we'll probably see less people come here. And then I just saw a slide today where something like 40% of home buyers in Florida are from out of state this year.
Oh, yeah.
So,
40%. Yeah.
and so, just being agile like that, maybe today you're investing in Florida, and then maybe next year you're investing back in Minneapolis or St. Paul or Eden Prairie or wherever, and, just being agile and being able to kind of move and shift is important. Because when you get stuck, being a buy and hold investor, being stuck and feeling powerless is really kind of the worst thing, right? So you want to exercise full control over your investment, and being involved in the community, you can kind of feel those things out when things are going wrong, when vacancy rates are increasing. And I'm not saying that's happening in Uptown, but just generally, those are the kind of metrics you want to look at. Because especially if your property, if you got like a duplex or triplex, you might not rent it out every year. So, the next time you rent it out, you might be in a completely different landscape than the last time you rented it out. So, kind of staying connected with other investors and finding out, where their rates are and how difficult or easy it is to rent things. And that informs you on your own decisions.
Well, and I think it also speaks to, I know you make sure that your properties have specific finishes and they're a little nicer, and that pays off in the long run, that granite countertop or whatever it is. There's a certain look that the people who live in Uptown like. And you need to know what that look is.
But it's not only about, getting the highest rates. Also, it's about getting the best tenants.
Right.
You might not get a huge, maybe you only get a couple hundred extra per month, but you'll get, rather than get 3 or 4 college students, maybe you get a professional couple that works at Target. And maybe they'll do a lot less damage to your apartment than 4 college students would. And that's what's changed a lot in Uptown since I started owning. When I started owning, there were a lot more college kids, and it was a lot more kind of run down. And now there's a lot more money to be made and higher. And it's crazy what some of these units are costing these days. Some of them are in Uptown $5,000, $6,000, $7,000 a month. Obviously that's not common, but just that people are paying that much to live in Uptown seems kind of crazy.
Yeah, I had one other investor say, by having a dishwasher, he could raise the rent $100 a month versus no dishwasher.
Well, and for me, it's, I always remodel all my kitchens. It's stupid not to put a dishwasher in. People do these remodels and then they, try and save $1,000 on the kitchen.
Yeah.
It's not worth doing, because it's going to be hopefully 20 years before you do it again. And once you take that $1,000 and you split it up over 10, 20 years and then over 12 months per year, I mean, it really comes down to nothing, and beyond, once again, beyond the rent increases, some people look at an apartment without a dishwasher, and they, just based on there being no dishwasher, they'll say, no, I'm not going to live there.
So, how do you manage your St. Petersburg, let's take, rentals from afar?
So I placed an ad on a job site online, and I actually had a realtor respond. She is a new realtor, being licensed about a year, and I pay her hourly, and then I give her a bonus for each. So I pay her. I said, how much do you want per hour? And she said $15 an hour. I was a bit shocked at that, but once again, yeah, right. Yeah. But so after the first week, I said, okay, we'll bump you up to $18 an hour, and I'm about to once again go to 20 because I kind of feel bad about it, but I'd be giving her bonuses for each of the units rented. She's been doing a great job, and her kids go to school in the same little town, so it works out pretty well. And she's also, trying to sell and buy houses. So I think it's good to have a little bit of steady income coming in when you try and get that started. If it wasn't for that, just hire a property management company. I was very lucky. I was just emailing agents down there saying, "Do you have anything to buy that you can sell?" And this one agent said, "Oh yeah, I just listed. Well, I just got this listing today, and had never been on the MLS. And right now, that town is selling duplexes for 350 to 400, and I got 3 duplexes and a freestanding cottage for 975.
What year was that? Recently?
This was a couple months ago.
Oh, see? Yeah, it's I like what you said because it's about who you know. Real estate investing is about networking, and you got to ask for what you want too. Like if you weren't calling around, there would have, if it did hit the market, there would have been a war going after it, right?
Correct. Yeah.
And you were ready and in position and had funding so you could buy it. Yeah, there you go. That's good. You were sitting in the dark there.
Yeah, I had my camera thing turned off. Yeah, no, and it was great. I got a great connection with a bank down there in Tampa, and but it was a growth experience for me because I'd been working with a commercial bank here in Minneapolis, Bridgewater Bank, for many years, and so I don't really have to. Usually, the relationship's pretty good. Where you might have to have an appraisal or something like that, but it's pretty easygoing kind of relationship of funding. And then going to a new bank and setting up a new relationship, going through all the checks and balances and stuff like that, is kind of a pain in the ass, really. But yeah, so but once you kind of done that, now I feel like I could go to any city and do it. So everything about being an investor is like a muscle, so you have to kind of exercise your skills frequently. And the more units you have, the easier it becomes, So now I have like a property management software for long-term and short-term rentals. And, I've got a property manager here. I've got 10 or 12 short-term rentals. And, yesterday I went and let one of the tenants in. He's a nice guy from Texas. And, that's the first time I've interacted with any of those tenants over there for 6 months, and, so you set up a system and you kind of fine tune it, but the goal of it is to kind of automate it, and
well, I'm curious, how many people would you say are on your team here? Because I know I see sometimes you're posting, hey, I need somebody to haul away some stuff from this property. Anybody available on Saturday at noon?
Yeah, so like I'll have people that have people. So like my property manager, she has her own helper that kind of works indirectly for me. I have, a drywall guy that has a full-time job working in one of the school systems that works with me. I've got a handyman. I've got a general contractor, and he usually has a couple people working for me every week on one project or another. I've got an assistant. He's a college student, kind of interested in real estate, so he helps me out with my bookkeeping and some of my day-to-day tasks with getting stuff rented, updating listings. I'm looking to hire some virtual assistants soon as well.
Oh yeah, VAs.
Yep. So, but really automation, you want to rely on people as little as possible because for anything you can automate, because people make mistakes. And even if you've kind of outsourced stuff to people, you can't always trust them. I've been working with my property manager for years, and she's been working with her helper for years. And recently, we kind of had not a disagreement, but I guess just a misunderstanding on what I expected each time there was a cleaning. So each time, I went over to the building, and operations had been so smooth, I hadn't gone to the building and they hadn't been cleaning the hallways. And it wasn't too bad, but it was dusty and a little bit dirty. And my point of view is, if you're going to go clean an apartment, and turn an apartment, why wouldn't you clean the hallways? Why wouldn't you, if you see something that needs to be done, and I'm going to pay you for it. If there's an extra half an hour of work, you say, hey, Steve, should I do the hallways too? yeah, great. You're already there. Half the
Yeah, do
battle
the
has been done
hallways.
there. Do the hallways. So that's why I said to him is just do it. Don't even ask me. And from then on it was fine. But just something that makes sense to me as something that's just super logical and common sense doesn't necessarily, it's something you have to kind of write a plan out for. You kind of have to write a plan for the lowest common denominator, like when you're planning like
Yeah.
cleanings or whatever, because you want everyone to do it the same way. And some people are going to be just do it naturally, and then some people will
In
need
short-term
guidance.
rentals, cleaning is serious business. I mean, it has to be turned over and cleaned right, or your ratings go down. Now, I want to fill in here with the rent control, because we know St. Paul has already passed a rent control ordinance of 3%. And
Mhm.
it's the most restrictive rent control policy in the nation. That's crazy. So what are your thoughts on this, and what's going to happen to Minneapolis? They did pass something, but they didn't pass anything. They just gave it to the city to decide at a later date. What do you think?
Also, yeah, I mean, under Minnesota law, cities can't enact rent control without permission from the voters. So St. Paul did both in the same action. They both enabled rent control and then enacted rent control in one fell swoop. Whereas
Yep.
Minneapolis only did the first half. So they enabled rent control to be used, but didn't actually enact it. Um, one of the benefits of the council, so the recent election really kind of moved the council to the right. The split is about the same. So before the election, there were, and when I say to the right, I mean, you know, the most right you get in Minneapolis is a moderate Democrat, so someone that believes, in property rights, that's pretty much as extreme as you're going to get in Minneapolis. So we had maybe two people before the election that were maybe considered uh, on the more moderate side, and now we have five or six. Um, and so, for example, there's a few, I won't name names, but that will probably block it on the council level. But beyond that, the mayor, and that's one of the reasons I pushed hard for the mayor, was he's been a big advocate for landlords in the past. And he doesn't necessarily do it on a above board way. Like he said he was against rent control, but because of the way it was being passed, he didn't want to say he was against rent control, but he is. One time the first time I met the mayor I was outside Lisa Bender's office, and I happened to meet the council person for downtown, which is the mayor today, and he had just met with Homeline, which is the tenant advocate people, and they were actually pushing for rent control at the time, and all three of us had a laugh about it. And it's kind of funny because Lisa Benders being one of the ones pushing rent control, Mayor Frey was against it, and I just happened to be there meeting with her and at the same time. So the city's come a long way. I wouldn't be too worried about rent control, and as long as you plan for it, it's not too big a deal.
I think you nailed it right there. As long as you plan for it. And that's what I tell people I run across, investors who want to buy in St. Paul. And I say, as long as it's not like sort of it's passed, but is it really in effect right at this moment? I said, as long as you plan for it and, get things right-sided quick here. And even Minneapolis, get your rents, optimize your property is what I always say to people. Get the right rents, and it's okay to have a vacancy for 1 month if you're going for the right rent, but you better have your place looking good enough to substantiate it. So it's about the plan. I'm right with you there.
And so they're probably not going to institute, well, for sure not going to institute any rent control this year, and hopefully not next year either. Hopefully we can rely on the mayor to block that. But regardless, you've got probably at least a year before anything's
so
enacted.
Get things in order. Exactly. Now's the time. Do that little bit of fix up, turn your tenant or whatever it is. Don't wait. Yep. And even in St. Paul, if you have a vacancy, get the right rent so that when they're going in on 3%, you're okay.
Well, St. Paul has, I haven't been following it too closely, but they have said that if anyone tries to raise the rent until it's enacted, they will go sue them. Now, I'm not sure how true that is, but what I would advise is maybe it's a good time to turn your tenants, like you said, if just encourage your current tenant to leave if they want to. I have a current unit where, I bought the building, 4 or 5 years ago, and I still have the same tenants. And, I really want to just get in. I want to actually make that much more money in rent, but the units are not, the unit's not in great condition because I've never had any vacancy where I can remodel. And so I went over there to talk to them today, and I said, hey, probably you should move out sometime, before May. And they're like, well, we want to stay to 2023. And I'm like, you could probably find something in much better condition for the same price. They don't want to move though. And so, it's kind of funny. Usually it's people think, oh, it's the landlord that has the apartment in bad condition. Sometimes it's a tenant that doesn't want to move out, and so, and that's something in the back of my mind is I want to deal with those kind of situations before anything in rent control can pass. Because they're not paying an unreasonable rent, but their upstairs neighbor, I haven't had the heart to raise the rent, but they're paying $13.75 for a 2-bedroom, and this middle of Uptown, and even on remodel that should probably be like 1,500. So I'm gonna need to do something about that next year.
Yeah,
and so
you think ahead, I guess, is what I'm saying. So, I know you've done a ton of buying and fixing properties. What kind of advice can you leave for us to, what have you learned? What should we pay attention to?
Yeah, so, just, people, I see a tendency of buying like, people don't want to do the work, buy something, it is hard to find good people to do the work right now, but, buy things that, you can put some money into. My advice is to move quick and I think that's Facebook's advice: move quick and break things. Don't be too afraid to make mistakes.
Yeah.
And then, but don't move slowly. I wish earlier on I had bought and traded a lot more rapidly because I might have been at 100 units by now. I'm at like 25 or 30 or something like that. But the faster you trade, I'm thinking about already selling those 7 units in Florida because I bought them for $975. I haven't done anything other than change the tenants out, and I've spent maybe $5,000 on various repairs, but I could sell it for 1.2, 1.3 million
already in a really quick time.
Yeah. And so that's kind of one of the, I think, unfortunate things in Minnesota. We haven't seen that, rapid price growth that some other states have seen. And so some of those units, the duplexes in Florida that's selling for 400 now, we're selling for 200. Some of the, I was looking at a fullplex that was 1.3 million and just was sitting on the water, and they had bought it for like 700,000, 3-4 years ago. So I wish I probably bought in Florida a bit earlier, but I think, for me, it's more of a kind of like lifestyle. I want place to be in the winter. But, kind of just seeing the trends is important. So, like Uptown will, I feel like with some of the governance issues, there may be better opportunities to buy. So, like you may be selling in one area for now, but then come back to buy later. You just have to follow the trends of the people that are buying and selling. You never want to follow the pack. I guess you want to kind of lead the pack.
That's right. So we do have a question from somebody here. What do you think the Uptown market or the Twin Cities, they're saying, is going to do in the next year or two?
Yeah, that's an interesting question. I think I don't see, nationally, I don't think pricing can go up. I personally think, we're due for a recession. I don't know when that's going to happen, but I think anytime they're trying to raise the interest rates, I think it's going to have that like negative effect. Locally, we have some pretty serious issues, as far as crime and some governance issues, especially as far as investment properties go. So we'll have to see how that will plays out. But Minneapolis is a great market. Has a highly educated workforce, and one thing going through the last recession, even though prices were very low, there weren't very many vacancies. Because we have a highly educated workforce. We have a lot of Fortune 500 companies. There's a lot of really good metrics involved in the city. The city is not a problem. It's really the governance that's a problem. So we need to fix that. We need to kind of encourage people to vote. And then, there are some other issues, like when I say governance issues, I'm talking about tenant right to purchase, the short-term rentals, all these kind of landlord, anti-property ordinances that go into effect. But once again, it's all about navigating. And I find that, a lot of these things will kind of eliminate small-time investors. So there'll just be like big-time investors, and then there's going to be owner-occupants, and there's going to be kind of no one in the middle. And you kind of seen that happen already.
Okay, and I want to share with you folks how to get in touch with both me and Steve. So I'm going to put up here a slide. First, I'm a realtor. I offer free strategy sessions if you want to talk about investment property. And actually, the easiest way is go to my website, LeAnnRiley.com. And then to contact Steve right here, you can email him at steve@theuptownguy.com. There, somebody's putting it in the chat box for me too. Thank you, my assistants here. And Steve, I just want to thank you for sharing some of your insights. And it's always great to talk to someone who, has done it for sure, especially all these people who are trying to figure it out. And you're a realtor, you're, in the know in that area. And I appreciate all you've shared. So thank you for taking the time to join us today. And like I said, for anybody, if you have more questions, you can email Steve. And like I said, look for him on Facebook too. Do you have something that he answers a lot of questions in investor groups is what I want to say.
Yeah. I'm in the millennial investor group quite a bit.
Yeah. So thank you so much for joining us today.
Thank you for having me. I appreciate it.
All right. See you guys next time.